Hi, welcome again to another edition of Market Analysis for today, Friday 28th, end of the month. I'm Gio Benacourt, and this is a recording by Vantage Markets right about 40 minutes prior to the session open of the U.S. session open. All right, well, the seasons are changing, and so is the stock market. Inflation pressures continue to moderate in January, which may give the Federal Reserve reason to lower interest rates again later this year. The personal consumption expenditure, or PCE, price index rose 2.5% over the past 12 months and was up 0.3% in the month of January. However, the stock market took a sharp turn south yesterday after President Trump said 25% tariffs on imports from Mexico and China will take effect next week, and the import tax on Chinese goods will go up more. The S&P 500 promptly gave up its gains for the year. The next marker, its stocks gains since Trump won the election. There's not far to go. The S&P is now only 1.4% higher since November 5th. But hang on, how is this different from last time? Stocks briefly took a dive on tariff threats a month ago, but quickly recovered when Trump delayed their implementation, though February still ended up being a bad month for stocks. If the president is keeping an eye on markets, he will have noticed to hit to car makers has been especially stark. Ford and General Motors are each down more than 10% since voting day. It's definitely a bad sign that tariffs are still headline news. On top of that, the artificial intelligence trade that has done so much to boost stocks over the past 2 years looks like it might be running out of steam. Nvidia, the maker of semiconductors that power AI models, beat Wall Street expectations on earnings on Wednesday, but the stock still plunged 8.5% yesterday. Big Tech looks tired. Apple is the only company that still boasts a value higher than $3 trillion. The jump in jobless claims reported yesterday doesn't help confidence in the economy. There are bigger questions underneath all of this. Is the market peaking? Has American exceptionalism, the idea that U.S. stocks will do well regardless of what happens elsewhere, has run its course? The recent gains in Chinese and European shares point in that direction. The market may still turn up again as we move into a fresh month and springtime blooms, but for now it feels like the vibe is shifting. So with that being said, we see how yesterday the market just completely took a dive. Today we did open with a tiny little bit gap up, but the market has closed that and is looking mighty dire for the market's direction. But again, this could just be profit taking, looking at more dovish scenarios for the index. Let's see if that will be the case for today. Now, this blue line that I have here it goes all the way back to a significant triple bottom. So, and that was created last year, right around the end of October, beginning of November, 4 days. This line right here. I'm bringing this to your attention, this level, since we are so close to it now, that you might ask yourself, okay, so is the market looking to bottom out at around this level, which is 20,000, very strong psychological number. Could that be the case? Could that be the case? Also, we need to understand that the VIX also takes information from the S&P, the stocks, the options on the S&P 500 have already closed out, so they expired, and that could have also been another reason for this decline. So therefore, I am going to speculate that today the markets, if we do happen to do a rebound from here, it might be short-lived. I'm just going to use the 50-day moving average and that 20,800 psychological round number as resistances, and then support, obviously just looking for some round values for it before the 20,000 marker. Will that happen today? I mean, well, yesterday we opened at 21,246 and we had a low of 2581. So that right there is round figure, right? Round figures right around 800 points. So 800 points from where we are to 20,000, that'll take us below 20,000 anyhow. So keep that in mind. S&P 500, okay. Also, even though this one, the S&P 500 had a better rebound, a better gap up than its peer, in a way, than the Nasdaq, but still trending lower. So 5840, 5800 is the next level of support. 5920 and the 20-day moving average are resistance levels. So let's give that some thought. The Dow, even though it did fluctuate to the upside yesterday, it broke our first level of support. So let's just use 43,000 as that psychological round number value as of level of support, and 43,600 as our first level of resistance, and I'm gonna use those swing highs as our second one. So it could be a rally momentum today to the upside. Let's see if that will happen. Crude oil yesterday did fluctuate above and close above 70. Today has just retraced all of that movement. So let's just use yesterday's swing high as probable level of resistance, and then support level. Let's use 69 as our round value number, and then the swing low from earlier in the week as our second level of support. And I am going to assume today's going to be, could have been profit taken. It has been taken. It has been done. Did a rebound from this low and will continue to move. I'm just going to speculate that today is going to be a sideways trading day for crude oil. So you might be caught in a trade and don't leave any trades open for over the weekend. That's a bad idea. All right, then Nat Gas. Let's just use these levels for Nat Gas. Retracement from this highs has been obviously around. I'm gonna actually just use $4 psychological round number right there, okay, and then just leave those levels. So initially retracing. Now gold is just keep on tanking. So we fluctuated below that 2,900 into the 28,800 is going to be jumping at me. I'm going to use the lower Bollinger Band as my first level of support. See if that'll be obviously our first target, and I'm going to use a 20-day moving average as my first level of resistance, and then I'm going to use that swing high from Wednesday as my second level of resistance. And looking for lower movement really across the board. It is the weekend, it is Friday. 50-day moving average seems to give silver some sort of a support. I'm just gonna bring down a bit because we are just trading right there. So 30.90, which I think this is just gonna be. I'm gonna use Wednesday's high and low as my probable level of resistances for silver. Selling, going with the trend, selling. Copper, all right, so copper is poised to make another move lower. But let's just leave that swing high from Wednesday as our second level of resistance. The first one, yesterday's swing high. Bitcoin is just tanking. It fluctuated below 80,000, but quickly recovered. But I think this puppy is going to continue to move lower. So let's just leave it at 78. Let's just move that to today's swing low. 80,000 is 90,000 is going to be our second level of resistance. Nothing but red across the board today so far. Let's see if this PCE will bring some better numbers across the board, but I doubt it. All right, the currencies, 105 resistance, second resistance, and then 28 moving averages at first. Okay, so it tanked, looking just to sustain itself north of 104, or around 104 actually. The pound also dropped, 20-day moving average as my first level of support, and 125 as our second one. So let's keep that going. Resistance levels, 50-day moving average, my first level, and then yesterday's open, my second level of resistance. And the pound, well, actually pound and the currencies, metals are going to continue to move lower as the dollar index continues to appreciate itself, recover, move up, continue to move higher. It did open with a gap down today, but let's see, 108 was that, whoa. 1075, and let's just use 106,700 as support. It's Friday. Have a great weekend. Today is going to be one of those days, choppy days. It is the end of the month also, so I'll keep that in mind. Have a nice weekend. See you Monday.